Okay, guys, what's going on with this Nvidia stock split? Does that mean that your stock is going to be 10x on June 7th when your one share turns into 10 shares? Well, not exactly. Let's get into it. First of all, no, your money is not going to multiply with the stock split. Basically, a stock split is going to take the stock and multiply it by the factor chosen. In Nvidia's case, that is by 10. But in multiplying the stock by 10, you are also going to divide its value by that same number. So if the stock sits at $1,000 at the time of the stock split, your one share will turn into 10 shares, but the value will go from that $1,000 value down to $100. So when you divide the 1,000 by 10, you'll get that $100 value per share. So instead of having one share that's worth $1,000, you'll have 10 shares, each of them worth $100, totaling that same $1,000. Okay, so if it's not going to change the value of anybody's holdings in that stock, then why even do a stock split in the first place? Well, that is the big question, isn't it? And there are generally two reasons that a company would want to do a stock split and oftentimes do. In Nvidia's case, this is the fifth or sixth one that they've done over the course of their time after their IPO, which is going public. So let's look at what those reasons might be. Okay, so the first reason would be to increase the number of shares that are available to the public. Now, you might be saying, well, sure, but aren't all those shares still owned by the same people? Yeah, the shares don't leave you, they're still owned by the same people, but this offers up the opportunity for those people to maybe offload a few shares here and there without getting rid of all of the stock that they have in that company. While they might have had only one share before at the high price that it was at, now they'll have 10 shares and they can sell off two, three at a time without losing all of their holdings in Nvidia, for instance. The second reason is related in the fact that it reduces the total price per share. So instead of having to buy one share at $1,000, people with less capital can now buy maybe two shares totaling $200, and it makes entry into owning the stock of that company a lot lower and a lot easier. And basically, these two factors just increase the availability to a wider market of people and makes the stock more accessible and could help boost the value of the stock in that manner. Now, the Motley Fool put out an article analyzing what has happened in the past with Nvidia specifically on their stock splits and what we might be able to expect for where their stock price is going to go and the value of their company as a whole. Now, Nvidia has provided some charts showing in this one the value of the stock 12 months and 24 months after their stock splits over the past couple of stock splits that they've been through. Now, this would indicate that the stock growth was much less after a stock split than what it generally has been in the past. To me, this gives the impression that maybe a stock split in the short term for a company, and specifically Nvidia in this case, might not drastically increase the value of that stock, especially in the first 12 to 24 months. But we can expect that Nvidia, having performed the way they have, are going to continue to grow over time. The other thing to note is that these stock splits happened, like four or five of them at least, around different recessions. And so those recessions could have been impactful and influential in the numbers that we see in these charts. Now, let's take a look at what might be a positive factor that could influence this stock split for Nvidia. Looking at this other chart, we can see the revenue over the last 5 quarters for Nvidia. Now, as we can see, it's been increasing dramatically, as well as their net income has been going up very fast. Nvidia is currently the top performer in the market of AI chips, and there's really not a lot of competition out there for them, which makes this even more impressive. What stands out to me is that their net income is increasing at such a rate that is increased above 50% of total revenue, especially in recent quarters. Now, the last thing to consider here with the stock split is that Nvidia's price to earnings ratio, since their revenue's been increasing so much, that ratio has been decreasing, meaning that technically, compared to the company's value, the stock is selling at basically a discount at the moment. Now, I can't tell you what to do with your money. You have to make the decision for yourself. But with all the facts at hand, you can make good decision about whether or not you want to get in to Nvidia now or wait longer. I think Nvidia has proven to be a great company as we can see the numbers. Their revenue's been increasing very fast, and this could be a good buy. As always, guys, thank you for watching. I hope this was informative and you enjoyed the video. If you liked it, give it a thumbs up and subscribe to see more content in the future. As always, thank you guys very much, and I'll see you next time.